I spent 40 years inside the SSA, sitting on the other side of the desk. And I'll tell you straight, being $1 over the line can cost you close to $1,000 a year. I've seen it happen more times than I'm comfortable admitting. And the worst part? Most of those folks did everything right, worked steady, paid their taxes, didn't try to game anything. Hal Goldstein was exactly that kind of man. 67 years old, Kansas City, Missouri. Divorced, retired accountant. 38 years keeping other people's numbers clean. The kind of guy who'd redo a ledger if one column looked even a hair off. He told me once he used to feel physical discomfort if a spreadsheet didn't balance. Not joking. That morning, it was cold enough to make your fingers stiff. He was already inside that little back office he still called his war room. It used to be client space. Now it was just him, an old folding table, archive boxes stacked like bricks, and a cheap desk lamp throwing yellow light over everything. And this is where it starts to turn. He had his pencil. Not a pen. Never trusted ink for this kind of work. Calculator to the right. Old tax returns spread out. Corners curled, some taped where they'd torn. Coffee sitting there cold because he forgot about it. I've seen that too. People get so locked in they forget to drink, forget to breathe. That was the first time the office war room calculator ritual really hit him. He started adding the numbers. The specific income number Medicare cares about. Your modified adjusted gross income. Pensions. A small investment withdrawal he barely remembered making. Just tapping, writing, erasing, tapping again. Then he stopped. I remember the way he told it. He didn't even believe the number at first. Thought he hit a wrong key, so he did it again. Slower. And here's the thing most people don't catch. Medicare looks back 2 years. So what you did back then, it comes knocking now. Medicare has a surcharge based on your income, an income-related monthly adjustment amount, or IRMAA. In 2026, if your income crosses certain thresholds, even by $1, you step into a higher IRMAA bracket. That means your Part B and Part D premiums jump. Not gradually. Just jump. For a single filer, that first threshold sits right around that low 100,000 range for that year. Go $1 over, and suddenly you're paying roughly $70 or more per month, depending on the bracket for Part B, plus extra for Part D. Added up over a year, you're brushing against $1,000 gone. Hal didn't know that number by heart. That's what got me. This is where most people think they're still safe, and that's exactly where they get blindsided. He leaned back in that folding chair, metal legs scraping on concrete, and just stared at the paper like it might change if he waited long enough. The room was quiet except for that cheap calculator still ticking from the last input. You can recognize that look right away. It's not confusion, it's something deeper, like your brain trying to reject reality for a second.
I kept thinking, no, that's not right. I mean, me? I spent my whole life catching this stuff for other people. I used to warn clients about thresholds, about phase-ins. And here I am sitting in a cold room, realizing I stepped over by $1 damn. One. It felt like I missed something so obvious I didn't even deserve to be upset about it.
I remember one guy, different case, different state, but same feeling. Sat across from me, hands shaking, still smelling like diesel from his shift. Kept saying, I don't make mistakes like this. And honestly, it still bothers me. Hal went back to the numbers. That's what people like him do. They don't panic first. They verify. Again and again. Second pass, third pass. That pencil started moving faster now, scratching hard enough to leave dents in the paper underneath. He recalculated his modified adjusted gross income, checked every source, Social Security timing, investment distributions, even a small interest payment he almost ignored. And every time, it landed the same, $1 over. Now, here's where pressure starts building, because once you realize the number is real, your brain shifts. It's not, is this correct anymore? It's, how bad is this going to hurt? I wish I could say people handle that moment calmly, but that wouldn't be honest. He reached for the calculator again. This time, not to verify income, but to project cost. Monthly Part B premium, base plus IRMAA adjustment. Then Part D surcharge layered on top. He wrote it out in 2 columns, neat at first, then messier as he went. That was the second time inside the office war room calculator ritual. He multiplied it out. 12 months. Then he circled the total. Hard.
It wasn't even the money at first. It was... I knew exactly what that number meant. I've explained it to clients. You cross the line, you pay the price. Simple. Clean. Except when it's you, sitting there realizing you did everything by the book, and the system still looks back 2 years and applies the rules the way it's designed. I felt stupid, like I lost my edge.
And there it is. That shift from confusion to self-blame happens fast. Hal wasn't reckless, he wasn't hiding income. He just didn't forecast it tightly enough. And Medicare doesn't care why you crossed the line. It just sees that you did. I've seen thousands of these IRMAA letters. Thin envelope, heavy consequence. And what gets people isn't the complexity, it's the timing. That 2-year look back catches folks right when they think they're finally stable. Now, in some cases, if your income changed because of a life event like retirement, there is something called the SSA 44 form that can be used to request a reconsideration. Hal sat there rubbing his temples, said later it felt like a pulse right behind his eyes. Hands a little unsteady, not dramatic, just enough to notice. There were boxes around him filled with old client files, names he hadn't thought about in years, people he helped avoid exactly this kind of thing, and he missed it for himself. Because this is the moment where most people either shut down or they lean in. Hal didn't shut down. He pulled another folder, then another. Started reconstructing not just the year in question, but the pattern leading into it. That's when the pressure turns into something else. Something closer to control. But it doesn't feel good yet, not even close. He sat there, pencil tapping, calculator clicking, cold coffee untouched, and realized the real question wasn't, did I mess up? It was, can I fix this before it keeps happening? And I'll ask you something, straight. If you found out you were $1 over and it was going to cost you nearly $1,000 a year, would you even know where to start fixing it? Hal didn't leave that room right away. That's something I respect about him. A lot of people would have walked out, told themselves they'd deal with it later. He stayed. Same folding chair, same stack of papers, that lamp buzzing faint overhead like it might give out any second. He adjusted the angle, pulled the calculator closer, and went back in. This was the 3rd time the office war room calculator ritual took over, but now the energy had changed. It wasn't about confirming the mistake anymore. It was about mapping the damage. He wrote Maggie at the top of a fresh sheet, underlined it twice, then started building it out like he used to for clients, line by line. Pension income, Social Security portion, investment income. That small withdrawal that tipped him over. He circled it this time, slower. That number includes things like taxable Social Security, pensions, and investment income combined. That's where I saw something shift when he described it to me. Not panic, not denial, just quiet anger. The kind you don't show anyone. Let me tell you something I've seen too many times. People don't lose money because they're careless. They lose it because they assume close enough is safe. Hal knew better. That's what made it sting.
I kept thinking about my kids. Not even the money. Just the time. All those late nights at the office, missing dinners, telling myself I was building something stable. And now I'm sitting here over $1 like I didn't learn a damn thing from it. It felt like I let my own system slip right past me.
That's one of those quiet gut punches you don't forget. Not loud, not dramatic, just sits there. He kept working. Built out a projection for the next year. Then the year after that. Because once IRMAA hits, it doesn't just disappear. If your income pattern stays the same, that higher premium sticks. He started testing scenarios. What if he reduced withdrawals? What if he shifted timing? What if he controlled the income streams just enough to stay under the next threshold? And here's where education meets reality. Those IRMAA brackets, they're cliffs, not slopes. In 2026, each level jumps your premium significantly. So managing your modified adjusted gross income isn't about maximizing, it's about precision. That's where Hal's old instincts came back. But he didn't trust himself fully yet. That surprised me. He told me he sat there, pencil hovering over the paper, realizing something he hadn't admitted in decades. He needed help. Now, a lot of folks hear that and think it's weakness. It's not. It's timing. If you wait too long, the system locks in your numbers and you're just reacting. Hal wasn't too late, but he was close. He picked up his phone, put it back down, did that twice. Then he reached for one of those folders again, flipped it open, and found an old note he used to give clients about local state health insurance assistance program, or SHIP counselors, free help. Real people who understand Medicare rules without trying to sell you anything. That's when things started to move in a different direction, but not before one more pass through the numbers. Fourth time inside the office war room calculator ritual, and this one felt different, slower, more deliberate, like he was rebuilding trust with his own process. He checked the threshold again, ran his income projection against it. This time, he didn't stop at "Am I over?" He asked, "How far under do I need to be to stay safe?" That's a different mindset. And right there, in that cold little room, with a dull pencil and a clicking calculator, Hal started building something new. But the question that hung over that table wasn't about the past anymore. It was about whether he could turn that $1 mistake into something that never happened again. And I'll ask you this. If you realize today that your income could push you into the next IRMAA bracket 2 years from now, would you actually change how you plan, or would you hope it works itself out? I've seen this part go both ways. Some people get right up to that edge, realize what's happening, and then they hesitate. They tell themselves they'll look into it next month, or after tax season, or when things settle down. And before they know it, the numbers lock in, the letter shows up, and now they're paying for a decision they didn't even realize they made. Hal didn't do that. He came back into that little office the next morning even earlier, said the cold hit him harder that day, like his body was still catching up to what his brain figured out the night before. Same folding table, same boxes, same cheap lamp. But this time, there was a second legal pad sitting there, clean and squared up like he meant business. He told me he didn't trust his memory anymore, not after missing that $1 line. So he did what he used to tell clients to do, but hadn't been doing for himself. He built a system, not a vague plan, not a keep an eye on it. I mean a full working accountant-level structure, columns, projections, timing adjustments. He started with his modified adjusted gross income and broke it into controllable and non-controllable pieces. Pension, fixed, Social Security, fixed once claimed, investment withdrawals. That's where he had room to move. I'm not here to give you financial advice, but I will tell you what I watched him do. He spread out 3 years of returns across that table. Some pages still had faint coffee rings on them. One had a tear down the side he taped months ago, and he started marking them up like he was back in his working years. Circles, arrows, notes in the margins. Then he called a local SHIP counselor. Now, I've sat across from enough people to know, making that call is harder than it sounds, especially for someone like Hal. 38 years being the guy with answers, and now he's the one asking questions. He told me he almost hung up before they picked up, but he didn't. They walked him through the current IRMAA brackets, confirmed the thresholds for his filing status, explained how certain income sources hit that modified adjusted gross income number, and how timing could shift the impact across years. Nothing magical, just clarity. And that's where something clicked for him, because once he saw it laid out, not as a surprise, but as a moving set of pieces, he stopped reacting and started planning. He adjusted his withdrawal schedule, cutting one planned distribution and spreading another one across 2 years to stay just under the next bracket. Smoothed income across years instead of letting it spike. Not drastic moves, precise ones. That's the difference. I remember thinking, this is what it looks like when someone takes control back without pretending the system is simple. And honestly, I wish more people got to this point before the damage sets in deep.
I didn't need a miracle. That's what hit me. I just needed to stop treating my own numbers like they'd behave automatically. I used to tell clients, you have to guide the outcome. And somewhere along the line, I stopped doing that for myself. Sitting there rebuilding it, it felt like I was earning back something I let slip.
That's a quiet kind of recovery. No big moment, no sudden relief, just steady correction. Over the next few weeks, Hal kept returning to that table, Same ritual, but now it had structure behind it. He wasn't chasing mistakes anymore. He was forecasting outcomes. He built out a full projection sheet, month by month, not just income, but how each piece fed into his modified adjusted gross income. Then he layered in the IRMAA thresholds right next to it. Clear line, no guessing. He told me he started checking it every Monday morning, said it felt strange at first, like he didn't trust the system he built, so he double-checked everything. Twice. That detail stuck with me, because even after he corrected course, even after he lowered his projected exposure to those higher premiums, he never went back to good enough. And that's the part people don't always talk about. Success here doesn't feel like winning. It feels like staying ahead.
I got it under control, yeah, brought it down. But every time I sit at that table, I still run the numbers twice. I don't rush it anymore. I don't assume. And every now and then, I just shake my head a little. Not angry. Just, I know how close I came to letting something small turn into something permanent.
This story shows how precision forecasting helped Hal Goldstein get out from under IRMAA bracket overage and remove the $70 monthly surcharge. Not every situation can be fixed this cleanly, but planning ahead makes a real difference. Here's what I've learned after all these years. Hal didn't fix this because he got lucky. He fixed it because he treated his own life with the same discipline he gave his clients. He turned that cold little room and that folding table into a control point instead of a place where bad news landed. The biggest thing I want you to take away is this. Being close to the line is not safe, it's unstable, and if you don't actively manage it, the system will make the decision for you. I've sat across enough tables to know. The people who recover from this are the ones who stop trusting rough estimates and start working with exact numbers. So here's what you can actually do, step by step. 1. Take that same calculator you'd sit with at that folding table, and every Monday morning at 6:50, sit down in the same spot and run your projected modified adjusted gross income just like you did when you were closing out client books line by line. 2. Pull out a yellow legal pad, nothing digital, and on the 15th of every month, draw 3 columns across it the way you used to. Structure client ledgers, income, adjustments, and Medicare impact, and fill it in slowly with that same pencil you trust more than a screen. 3. Lay out your last 2 years of tax returns across the table once every quarter, flattening the pages with your hands, exactly like you did in that office war room, and compare them line by line to check for discrepancies before signing off. 4. Keep that calculator within arm's reach on the table, and every single time you even think about taking a withdrawal, sit down right there and run the number first, just as you'd verify totals before locking in a final report. 5. Every Friday morning before you start your day, sit at that same folding table with your pencil and one clean sheet and rebuild your income projection from scratch the way you used to audit a messy set of books to make sure nothing slipped through. 6. Take one of those old folders, just like the ones stacked in that room, and keep a running set of notes inside it, and every Sunday evening open it and write down anything that doesn't make sense, exactly like you did when flagging client issues to revisit before a deadline. If you're somewhere between 50 and 70, and this story hit close to home, leave a comment below. I read them, and I try to answer as many as I can. Let's figure out your situation together. This content is for educational purposes only and does not constitute financial, tax, or legal advice. Individual situations vary. Consult a qualified professional or your local ship counselor before making any decisions. And I need to say this up front. This is a dramatized story based on real IRMAA cases I've seen over the years.